everyone, and welcome to our second Startup Canada webinar of 2026, Understanding the Funding Landscape in Canada. My name is Amanda Logan, Programs Officer at Startup Canada. To begin, I would like to take a moment to acknowledge the land on which I am today, which is located on the unceded and traditional territories of the Algonquin and Anishinaabe, also known as Ottawa. As we are a national organization, I would also like to acknowledge with respect the diverse histories and cultures of all Indigenous peoples. I encourage you to take a moment to acknowledge the traditional territory that you are residing on today. We welcome you all to connect with each other in the chat. Make sure that you are sending your messages to everyone in the room. You are welcome to share your LinkedIn or your business social media pages, but please note you are not obligated in any way to share any personal contact information. Today's session is being recorded and it will be added to our YouTube channel afterwards as a living resource. So a little bit about Startup Canada. If you're unfamiliar, if this is your first time with us, Startup Canada is a national nonprofit that is the gateway to Canada's entrepreneurial ecosystem. We're here to connect entrepreneurs with the support, community, and tools that they need to build a successful business in Canada. Startup Women specifically is an annual program offering support to early stage women identifying entrepreneurs across Canada through topic focused webinars like today's, industry roundtables, and meetings with startup women leaders. We know that when you support women, you support a nation. I would also like to take a moment to promote our Startup Women podcast. Our Startup Women podcast is fantastic. It is hosted by Mallory Rowan in partnership with CIBC Business Banking. This 8-episode series features real stories, insights, and hard-won lessons. Most stories focus on either success or failure, but business is never that simple. Hear from founders like Connie Lowe of Three Ships Beauty, Sandra Perron of Pepperpod, Bhagarvi Varma of Brown Girl Angels, Rachel Wong of Monday Girl, and there are more to come. Listen anywhere where you get your podcasts or watch on YouTube. I would also like to thank our program partners, UPS and Scotiabank, our ecosystem partner, WEOC, and our community partners. Will add the full list into the Zoom chat. Today's conversation will focus on helping entrepreneurs find the right capital to grow their business with a deep dive into grants, government programs, loans, crowdfunding, and equity financing available across Canada. We have prepared questions for our panelists. However, if you do have a question, please write it into the Q&A box on the bottom bar function of your screen. We'll do our best to answer it live. Now, without further ado, I am honored to introduce our speakers today. We are joined with TrevAna, CFO and cash flow strategist of TrevAna Consulting, Stephanie Sang, Canada's grant angel of Granted Consulting, and Andrea Jacob, business advisor of WeBC. Hello, my lovely panelists. Thank you all so much for joining me today.
Hello, hello.
Hello.
Hi.
So glad to be here.
So glad to have you. So Kara, Stephanie, Andrea, thank you all so much for joining us in today's webinar. I thought to start us off, you could take us each through your journey in supporting startups and small businesses with their finances and how you can support our community today. I'll pass it to Stephanie first, if you want to talk about yourself and a little bit about Granted.
Yeah, absolutely. I started Granted in Vancouver in 2011 and incorporated in 2012, purely because of my passion of helping small businesses identify the best grants for their business. So we don't do not-for-profit programs and whatnot. But yeah, we've been doing this for 15 years. We went from consulting and now we have our own technology that does the grant matching for businesses and overlaying AI onto it now. So just progressing to solve a problem that I think should not exist. But at the same time, I think it's important that businesses have access to different resources like grants.
Fantastic. Thank you so much. I'll pass it to Kara next, if you could introduce yourself a little bit.
Yeah, I've built and sold multiple seven-figure businesses, and I know what it feels like to pour your heart into work that matters and also to lie awake at night, wondering how to make payroll. When the pandemic hit, my restaurant lost $25,000 of revenue overnight. And I did panic for a period of time, understandably, but I turned to the numbers, and it's that clarity that let me exit on my own terms and move the business forwards. And now I work with established business owners that are living with that same pressure and lie awake, under that. And I know how to make the numbers work. And I am thrilled to support entrepreneurs.
Amazing. Thank you so much, Kara. I'm so glad you'll be bringing the perspective of both a business owner and a consultant. I think that'll be very helpful. And of course, Andrea of WeBC. I'd love if you could introduce yourself and tell us a little bit about WeBC.
Sure. So I'm a business advisor at WeBC. So WeBC supports women entrepreneurs throughout the province, and we provide education and resources, as well as business advising and small business loans. So myself as a business advisor, I talk to entrepreneurs in every industry, it seems like, and a variety each day. I work with, everything from food and beverage all the way up to tech. And on a personal level, I was an entrepreneur and owner of my own business for about 10 years prior to starting this role. So um, I've walked the walk, and I love helping founders and entrepreneurs on a daily basis.
That's fantastic. Thank you so much, Andrea. I mean, similarly, I think it'll be great. You can relate to everyone on a deeper level. I think all three of you can. Um, Fantastic. So I'm gonna get started with some of our questions, but as a reminder to everyone watching, you are welcome to submit some questions as well. Just use the Q&A function. You will find it in the bottom bar. Sometimes you have to click the three dots that say more to find the Q&A. But we would love if you submitted some questions as well. So today, I want to ensure we cover as much as we can regarding funding for startups, from bank loans to grants to investors. But to start us off, Kara, I'm wondering, can you bring us through when is the right time to start finding funding for your business? When can someone access funding if they have a business idea, but are not yet incorporated?
I would love to speak to that. So I think the right time is before you really need it. The biggest mistake I see founders making is waiting until they're desperate and they're kind of flying blind. And by then, the options start to shrink. So even before incorporation, options are maybe more limited, but they still exist. And I think it's about believing in the value of what it is that you're bringing forwards and recognizing that there's people and entities and organizations that want to get behind you and support you in that.
That's great. I think that's fantastic advice. And maybe like what could that look like if you aren't incorporated, but you maybe want to take out a loan? Would that look like taking it out against your own name instead of a business name?
Yeah, there's so many different ways to structure that. And I think it's all about that creative uh, opening of the possibilities and seeing all of the different options available to you from your own resources, but also looking at the relationships that you have with friends, family, in your business networks. All of those people that are surrounding you, just really thinking about it in terms of Tony Robbins likes to say, it's not a matter of your resources, it's a matter of your resourcefulness.
Mm, fantastic. Thank you. So Stephanie, when it comes to getting creative about that funding in the early days, uh, sometimes it feels too early to be looking at the grant world, but are there specific grants for new ideas in business prior through going through the process of incorporation or even launching?
Hmm. Great question. And I get this one a lot. It's definitely more challenging to be able to access grants if you're early stage startup and you are just in idea phase. Where grants tend to come in is once you're a little bit more established, you've got at least a year or two of business acumen, and you can prove to the government, because we primarily work on government grants, that there's an opportunity for them to support you and that that money's not, wasted taxpayer dollars for someone who has an idea and then the beach is beautiful and they want to go there and they forget about their business. So that's kind of on the government grant side. Having said that, there are a range of different women startup types of programs, again, often they will require that you have been around for at least a year or two so that you can prove what it is that you have been developing or creating and building. And so there are some that are available. They tend not to be government sponsored or provided, and they tend to be more, maybe an industry partner. It could also be something like a bank that would put
Mm,
that out there.
awesome. Thank you. I think that's really great to know. And then Andrea, from your perspective, for in both cash flow and grants, what does a founder need to have? What do they have to have in order before they pursue any kind of external funding?
Right. So anytime you're looking for funding from, whether it's a lender or an investor, there is this uh, you have to be able to tell your story and explain the opportunity and why this money that's going to come into the business is going to fuel that growth. And so, yes, the cash flow is one of those pieces that's vital for presenting your situation, but of course also the business plan. And the way that I explain it to my clients is that the business plan is like your storybook. It's going to tell me about you, who you are, what you bring to the table. It's going to tell me about the situation of the business, what the opportunity is, what your product market fit is, like how does it fit into the industry that you're trying to get into, and how are you differentiating yourself? So those pieces, the business plan, the cash flow, they kind of are the puzzle pieces that all come together and tell your story. And then, of course, even if you have some early sales, of course, if there's some backup financial statements kind of show, hey, look, I do have some customers, that's always really valuable. So those are the things that, in the most basic sense, are needed. Of course, there's a little bit more supporting documentation that comes along as well.
Amazing, thank you. Yeah, I mean, a business plan is everything, right? It's kind of like your Bible when it comes to, beginning to access funding. Um, so I want to start off our conversation with everything that we want to cover today with the idea of crowdfunding. So for any of my panelists, it's not too uncommon to see someone with a new idea choosing to go the crowdfunding route. It can sometimes feel the most accessible when bank loans and grants can sometimes feel intimidating. Do any of you recommend the route of a platform such as Kickstarter, or are there better options for a startup?
I can start. Kickstarter and crowdfunding, I think they're great, but it's just, I think, to consider it less of a sales tool and a more so of a marketing tool.
Mm,
More specifically, I had a client and she did amazing. She, went above and beyond her targets on crowdfunding. And when she came out of it, she's like, I barely broke even. So, if you understand exactly what you're getting into and what it's actually going to cost you, then it can be definitely worthwhile.
great.
Yeah, and just adding to that, I think that it's so important to really look at the entire cost of delivering what you're promising to deliver, through your crowdfunding campaign. And like Andrea spoke to, it's a marketing event that you're providing something in exchange for the support. And so knowing how much that is going to cost you to provide it will kind of get you out of that classic trap of the revenue was strong, but where's the money? Like the crowdfunding campaign was successful, but at the end of the day, I put in a whole lot of work, but I didn't actually generate much that can help to fuel my growth moving forwards.
Mm-hmm. Um, Building off of that and what that those conversations look like when you're building maybe like a Kickstarter campaign or something like that. An early step that we see is going to friends and family first, right? And that's a lot of people's first step in the fundraising process. Kara, what is your experience with businesses going this route, and how would you recommend folks navigate those early days conversations with supporters?
I think it can be a very successful way, especially initially. And I think that what's most important is to really treat it like a business transaction, the same way that you would with a third party. And so you may have that foundation of trust and mutual support, but we also need to have clear communication about. And also to write that down and actually have a signed agreement about what are the expectations, putting it into writing. What is this, a gift? Is it a loan? What are the
Mhm.
repayment terms? All of those things, and actually have those conversations. We're in our society, right? We're not, it's kind of taboo to talk about money, but it is so important, especially in this situation, and to understand, talk about what happens if, worst case scenario, and the money can't be repaid if it's a loan. Like, what are the impacts all around, so that you're really prioritizing and preserving the family and friendship relationships as the priority, and it's through clear communication.
Yeah, thank you. I think that's fantastic advice because you don't want things to get messy, right? And you want to value those relationships while still valuing the business that you're building. Which is often, as a fun segue, the reason why people go to bank loans or other ways of loans instead of their friends and family, right? Andrea, can you take us through what is the difference between a loan from WeBC or BDC, or a similar organization versus a traditional bank loan, and which might be better for early stage startups?
Right, right. So, when we think about the traditional banks, we often talk about them as formula lenders, whereas WeBC is a viability lender. So WeBC is kind of a viability lender, and you may have heard of some of them. So yeah, BDC, community futures, that kind of thing. And so when you look at a formula lender, what they do is they often take a look at certain numbers, your credit score, your net worth, and they kind of plug it into their algorithm and it kind of spits out a decision. And where we're different is that we really spend the time to get to know each individual. And oftentimes that means that there's certain situations that might disqualify someone from a traditional lender that we're more flexible and we can take a look at. So some of those common situations are if someone's an immigrant, they're relatively new to the country, they might not have that credit score or that credit history to build off of, something like that. Or a mom is, coming out of a divorce and a similar situation, maybe the equity is a little bit low in the business. Let's talk about it. Let's figure out what the options are. So it's more of a conversation. And that works oftentimes for early stage startups that might not have that track record, that personal track record, that business track record. And that's where it's valuable to have that kind of support. And then on the other end of things, when the loan does go out, where viability lenders tend to differ is that we stick with the entrepreneur. So, there's people that I've given out loans to years ago that I'm still checking in with. I'm talking to them. Are you having any issues? That kind of support. So those are the main differences that you'll find out there.
Yeah, thank you for bringing us through that. I mean, I think that's really nice to know, especially if this is your first time, building a business, to have that more of a personal relationship and someone who can actually kind of bring you through that, and there's a little more comfort in that. Um, as a follow-up, when it comes to loans, how should an entrepreneur be thinking about taking on debt strategically versus funding their growth through grants or equity?
So, of course, Stephanie can talk a little bit more about grants, but we always say, anytime you can get grants, if you can, it's great. That's always a great place for funds. But um, when thinking about, capital from different sources, it really depends on the individual entrepreneur, and the individual situation of the business. And it's really about thinking about the growth strategy, where you want to be, and also what you're able to do. I'll give you an example. I had a client, and she's a scientist, and she's great in the lab, and she's like, I want to go for I want to get that equity investor to come in here and take this all the way to market throughout globally. And I was like, well, you have to be prepared for that. Are you prepared to get up there? Are you prepared to pitch? Are you sure you want to step out of the lab and do that? And so we really had to talk about it. And it was a good, frank conversation because she's like, well, maybe I need a co-founder. And so so then she kind of went through this whole progression. So it kind of depends on the business and depends who the person is and what that growth trajectory is.
Hmm. Amazing. Thank you. Now, of course, in that question, we briefly touched on grants. So we have our grant expert with us, Stephanie. I'd love to get into a nice meaty conversation about grants. As I mentioned earlier, sometimes the world of grants can feel intimidating or feel like a lot of time invested without a strong understanding of potential outcomes. Can you bring us through what are the biggest misconceptions you see with grants for startups, as well as what is the biggest myth that holds Canadian entrepreneurs back from even applying in the first place?
Hmm. Wow, there's a whole webinar just on that alone. I think that the challenge is often that grants can be a little bit of a moving target. And so by the time you hear of this program, whether or not that program still exists, whether or not they've, reduced the scope of who they are willing to fund, that often is the biggest issue, is not even knowing where and whether or not you can even apply for this grant. And so that's one challenge that exists right now. And then, of course, the other thing that I think is a big misconception and might hold people back from being interested in applying is the word grants is what most people refer to when you go to school and you can get a grant and they give you the money up front, and they just drop the money into your bank account and that's what it is, and then you go and spend it on school. When it comes to business grants though, and because these are government dollars that are being dispersed, the ones that we work on for the grants that we work on, the challenge often is that there's a repayment schedule for it. So gone are the days. And when I first started this business 15 years ago, there were certain grants where they would just drop the money into your bank account. You apply, you get approved, the money comes in, and then you have to just provide receipts. And I think that there's just so much fraud and so many pieces of, scarcity from the government side where they go, well, we want to make sure that this money is being used in the right way. And so what they're doing now is saying, okay, we'll give you what I like to call the golden ticket, which is a funding agreement after you've been approved for a grant. But you need to follow through with these activities in order to be able to make your claim. And once you make the claim, we're going to look at the claim and just verify, did you spend it on the right things? And should that work, then we're going to reimburse you on that portion. So it is upfront in that kind of often before you start your activities, whether or not you have the funding support. But it also holds the business accountable to ensuring that they're reading the documentation, they understand the commitment and what are the eligible expenses that they can claim before they can actually claim it. Because there are times where I often will say, you can get the grant, but did you get the dollars? And those are two different things.
Mm.
So I think that might be one of the misconceptions is the money just comes and I applied for this. And for certain grants that are not government, that might happen. But often with government grants, there's an accountability piece that they look at. The other thing that I will mention, because this is a Startup Women webinar, is, well, I'm a woman, and in my case, I'm a visible minority, and I'm under the age of whatever it might be. My parents or my friends told me that there's a big bucket of gold of grants for me to start my business and for me to grow it. And I don't have to pay for my own marketing and my own sales because somebody else will pay for it. And I will say that's part of the reason why I started this business is really to help businesses understand that while there have been, not to say that there have been programs that will help you with startup. And I will say those still exist within the Indigenous community more than anyone else. Like it's really 95% of the grants don't do that. And so being a women founder myself, that's where I really took it upon myself to dig and find all of the potential opportunities. And what I notice is it's more with government grants, it's more about what you're doing and less about who you are. And again, the exception being Indigenous entrepreneurs. So I just want to burst that bubble early on because it's one of the most sought after answers that people will, expect. Like, well, where are all the grant funding programs for this? And I would say the other one is also often youth. And while there are programs for loans like WeBC or, any women enterprise program that's specifically for women or those who identify as such. And then there's Futurepreneur for youth. Those are loans, they're not grants. And so that's important to just point out.
Do you ever notice a difference in maybe grants, seeking maybe equity deserving applicants depending on the industry the grant might be in? I
Mm,
have a personal background in the arts, so sometimes you do see that in the
yeah,
arts, they want
sure.
I'm curious as to your experience with that.
Right. I appreciate that. I think there's an opportunity to get a bonus mark. We've all taken tests where you can get a
Mhm.
bonus mark. So if you are in a rural area or if you're sometimes newcomers to Canada or you're in a, visible minority, women, gender, whatever, LGBT, like any of those, sometimes you will. But what I found was interesting is the government has also changed a little bit over the last few years. So while the grant might not be for the equity deserving entrepreneur, sometimes you will have a preference to equity deserving new hires. So hiring is a big bucket of
Mm.
grant funding. And so bringing in women in STEM, or, right now we're seeing a growth opportunity for like women in natural resources, forestry, mining, earth sciences, oil and gas. And that tended to be for many generations and many decades, more male dominated industries. And so we are seeing that shift of just, is there something that we can do to increase the equity amongst the audiences and the workers here in Canada in these unique industries? So that's what I would say. It's like more bonus points, and sometimes it is more on who you hire through a grant as opposed to who you are as an entrepreneur applying for the grant.
Awesome. Thank you. I think that's really great to know. Because I know that that's a misconception that I've held in the past. And so I appreciate you bringing us through that. One more thing that I'll ask you to bring us through is how does one find grants that are actually a match for their business?
Mm.
Where does a founder even start? Yeah, where should they be looking for those?
So there are a few free resources. So Canada has a platform through Innovation Canada called the Business Benefits Finder. And so that is a curated list from federal all the way down to sometimes you'll see some provincial programs in there. And I'm going to say this with a very loving caveat, which is as good as the government is to put a portal out there, I found challenges with the accuracy of it. So I'm still seeing programs on there that, have already been gone for a year. They're still showing up. And part of the challenge is obviously the hierarchy of communications that exist in government, where to take a web link off or to add a web link in, it takes just layers of approval. And so that timing is not necessarily pertinent. Google, I mean, often Googling, I'm looking for this, and is there a grant for that? Sometimes people are utilizing AI now as a way to facilitate it. Again, the information that you will see online and through AI, and AI, you got to be careful because it's pulling from sources that are like Reddit. So it's not even necessarily, truth behind it. Those are some of the other resources that people will use. For us at Granted, we've built our own grant matching platform that matches grants to the business, including business stage, including region, including industry. And we built it because honestly, we just felt we could do it better. And so knowing, what the key components are. And so we're launching the AI version of that very soon, and it's called Get Granted. So you can Google that if you'd like, and I'll provide the link afterwards. So I think that's, definitely if you connect with or look at resources from Startup Canada, sometimes through the newsletters and or on a resource page on industry associations, you might find information there. Again, that requires a human to make sure that that is being updated on a regular basis. So we want to take that kind of load off these organizations that are doing amazing other things. Grants are not their, core, and take that on for ourselves. So those are some of the resources that I would recommend for sure.
That's fantastic. Thank you. I mean, I will take the opportunity to plug our resource guide. It does take a lovely human to update it, but we will be emailing out we have a resource guide specifically for startup women. It's not just exclusively grants. It's everything from loans to business advice to grants that we have listed, and it'll be emailed to everyone who attended the panel today. Just so you know, that'll be in your inbox in a couple business days. Kara, how do you see grants um, helping your clients when it comes to developing their financial strategy? What does a timeline realistically look like from finding a grant to actually having money in your account? How do you plan around that?
Grants can be really powerful, but you can't really run your business just solely relying on grants or relying on a timeline. Like Stephanie spoke to, they're really like the fuel, not the engine itself that's driving the economic success. So many people don't realize like the grant approval, shows up as income before it actually shows up as actual cash. So you need to really plan your cash flow forecasting and know what your runway is. It's very helpful when a grant can be layered on top of a really solid operating base. Not a substitute for it. So we need to have consistent positive cash flow and enough runway first to know how we're going to cover, those expenses by the time we then complete the grant process and get reimbursed for that. So it's all about making sure that we have the runway for it. And that's what I do in my work as cash flow forecasting, is to really make sure that the cash is there when it's needed. And then by the time the grant comes in, then that's just part of the whole financial cash flow forecast picture.
Awesome. And Stephanie, with a 92% success rate on grant applications, which is amazing, what do winning applications have in common that most people miss?
Mhm. It's a great question, because I think that sometimes people don't dig deep enough into the eligibility criteria, and they check off 3 out of the 5 boxes and they're like, it's like writing a test. I scored 60%. I'll probably be able to apply. And the reality is, grants, you do need to be 100% on eligibility to even qualify. So don't waste your time on programs that you don't meet in terms of eligibility, because you could be spending that time growing your business and doing other things or accessing other programs. I think that it's yeah, I mean, so I maybe I'll just kind of start with that and just see if anybody else on the panel has, comments on what on that side of things.
I
Yeah.
would say that again, it's the understanding the value that you're providing. Like, what is your value proposition in your business, and making sure that the mission of the grant is aligned with what it is that you're providing in your business.
I'll just add in one extra thing, is having a grant strategy is actually really helpful. And so what that means is looking at your, at the beginning of your business year, you will probably look at what are the things that I want to do this year with my business. And maybe it's on a quarterly basis or a monthly basis that you have these goals. And so maybe in quarter 2, you want to bring on hiring someone. And so the opportunity is to start looking at those grants maybe the quarter beforehand and seeing if there are programs that could be a good match. And as a result of that, you're really driving the grants that match your business goals as opposed to chasing the shiny object.
Mm, fantastic. Thank you. I see that there are some grant questions popping off in the chat. We'll get back to grants during our Q&A portion, but I do want to make sure we dive a little bit more into loans. So Andrea, as our loans expert on the call, can you bring us through, when is a business actually ready for a loan? I know we talked about this a little bit at the top of the call, but at what stage should they be reaching out to an organization such as WeBC or something similar?
Right, right. So, I mean, WeBC supports women whether you're at the ideating stage, you're just thinking about it. We have those resources to help you think through it and start to develop um, your business plan and your business strategy, those kinds of things, all the way to the other end of it where we're advising clients on how to exit their business. Um, So you can reach out at any time and there's support all along the way. When it comes to the actual loan piece, though, it is a little bit more specific. So what we talk about for a business that's ready for a loan is when it's revenue ready, and revenue ready and viable. And so if you think about the mechanics of the loan, you get approved for the loan, hypothetically. The money gets, you get the money. Now it's time to kickstart all the things that you were going to do. But within very short order, within a couple months, or depending on the timing, you have to start paying back the loan. And so in the spirit of the loan is that the money goes into the business, it helps the business grow, and then profits pay the loan back. And so if you think about it in that way, a business is ready for a loan when they're ready to pretty much open their doors and get selling. And so that's what a lot of the conversation is about in the loan assessment process is it ready? Are you viable? Are you ready to go? Um, and I think it's valuable for entrepreneurs to come in and get kind of familiar with the resources and whatnot, because generally speaking, sometimes, loans can be daunting. And, we look into the research a lot, and historically, understandably, women are a little bit gun shy with debt and don't really like to take on loans, tend to like to bootstrap things. And so, having that conversation with, the business advisor and understanding, getting a better feel for when is the right time and if it even makes sense at all, those are good conversations to have.
Hmm. Um, and we talked about how important the relationship is, with a business advisor from an organization like WeBC. You're a business advisor yourself. Can you bring us through a little bit more what that advisory relationship actually looks like in practice? You said you're still in contact with some folks that you worked with years ago, and I think that's fantastic. So my question is gonna be, how long does it last? It seems like it never really stops, but um, yeah, can you just bring us through the stages of how you're matched with a business advisor in the first place, and then what you really can do for a founder?
Right, right. So there's, I guess, two different kinds of business advising. There's just general complimentary business advising. And so anybody can come in and say, hey, listen, I have a problem. Anything from, oh, I'm not quite sure how to hire my first employee, or, I don't know how to handle this marketing. So that's kind of like outside of loan land. But then once someone comes in and they are a loan client, they basically get a cheerleader for the whole term of the loan. So that's usually 5 years. And that means that you have a dedicated person that you can call up anytime that you want, and we'll check in with you on a regular basis. So sometimes as a business advisor, your job is just to kind of make sure that everything is okay and then get out of the way when they're steaming full, like steaming ahead, doing amazing. Don't bother them too much. And some of them are struggling. I had a client, she's got an e-commerce store and she just can't get that traffic. And so I said, okay, let's talk about things that we want to work on. I'm going to check in with you in a month and we're going to take a look at these numbers and see how they compare to benchmarks and what's typical for the industry. And so that's a lot more hands-on because she's struggling a bit. And so that's the kind of relationship that you kind of have with all of your clients. And you just have a portfolio of people that we're all checking in with on a regular basis. Now, on the team, there are different folks that have different specialties. That in my particular case, it's marketing. And so whenever someone says, "Oh, I don't, like I need to talk about marketing metrics," then they kind of generally move them in my way. But we also have people that have specialties in food and beverage. And so when that kind of business comes along or is asking specific questions, we kind of aim them that direction. So while we're kind of generalists, we do have specialties as well.
Hmm. I mean, that's great. And Andrea, you as well as yourself, Stephanie, and I'm sure Kara as well, you have decades of experience working with Canadian entrepreneurs. What is the most common gap you see in women entrepreneurs you work with when they first come to you for support?
Yeah, I would say the biggest gap is not knowing their numbers. And what that means in practical reality is having your books up to date and having a monthly closing process where all of those numbers are reconciled. There's a bookkeeper, really doing that and keeping track of things. Because it's from that basis that then we can put in the forwards looking clarity that's needed to plan out how the debt is going to be repaid. So it's not actually like projected revenue, it's the actual cash in your bank account that is going to be used to repay those loans when the payment is due.
Mm-hmm.
And I feel with grants, it really is understanding whether or not they can apply for certain programs. And whether or not, I mean, some of the other programs, some of the other questions I get are more strategic. So it's understanding, is this the best grant for me? And so there might be a couple of different options, and that tends to be one of the questions. The other thing is just, oh, my friend got this program, and so I'm wondering why, I was rejected for it. And so often it comes back to the intent of the program, it comes back to the eligibility criteria and making sure that that is correct.
Mhm. I would, you know, I completely agree with what Kara is saying. I think one of the biggest gaps is that, um, like that almost fear of the numbers a little bit. And if there is that, it's so common. And in fact, there's a book about it that we all have here. It's called The Trauma of Money, and um, how women uh, approach money very differently than men. And one of the things I get, whenever I'm out at an event, I often get this, the a guy walks up to me and he's like, "Well, where's the support for men?" And I think one of the things that one of the stats I keep now is that, um, people were allowed to have personal bank accounts back it started in the 1780s. But women were only allowed to have bank accounts in 1964. So it took about 200 years to let women have bank accounts. And it took even longer than that for women to have credit cards, allowed to have credit cards, and have business loans in their own name. And so it, there's undeniable like effects of that. And so it's kind of almost baked into women. And so getting over that and taking a look at those hard numbers and really being able to dig in, um, that's often missing. But we're definitely capable. One of the basis of WeBC is that when it comes to lending, the research shows that women have a far better default rate, as in are far more capable in being financially prudent and paying back their loans. And so we're definitely able to and would be even better at it if we could fill that gap.
Mm-hmm. I mean, I think that's a phenomenal call out about the history of women even being able to have their own bank accounts, because I do think that there can be sometimes a little bit more intimidation when it comes to those conversations about money for women, um, because it hasn't been as ingrained in us. Can you remind me of the name of the book you mentioned?
The trauma of money.
The Trauma of Money. Okay, we'll share a link to that book in the chat because I think that's fantastic. I'll also say, when it comes to like understanding your personal finances first before business finances, Happy Go Money by Melissa Leong, a Canadian woman as well, is a great resource to, feel like you're getting your own personal grasp first before you start approaching funding your business. Thank you all so much for bringing us through that. And I've seen some quite funny comments about the man asking where all the support for men is. So thank you for that in the chat. You're making me laugh. Um, Kara, I want to talk about investors a little bit. What is the difference between an angel investor and a venture capitalist, and what should you be approaching first?
Hmm. Such a great question. I think that part of the mindset or the work that is in front of us as women is actually embracing like learning language. And because this world of money and business is a little bit like a foreign language. So unpacking, words like angel investors or venture capitalist is, I think, part of that. So I love the question. An angel, I would think of it as a person. So they're betting on you and it's more of a personal relationship. So there's some advantages there. They're quicker, they can invest their own money, they tend to move faster. They also tend to provide a level of mentoring support as well. And whereas a venture capitalist is really more of an organization, they're like an institution that's betting on a portfolio. So it's more that they're managing other people's money. So they have like funding mandates and they have return thresholds and they're looking for businesses that have already had that proven track record. They're less inclined to take on risk or to use their own relationship-based assessments. So again, but before you approach either, it's really about knowing your cash story. Know it like the back of your hand, not just your profit numbers, but the actual cash flow forecasting. It's critical in all of these. It's the kind of the common thread that's weaving throughout everything.
And so speaking of that specifically, you talk in your consulting business a lot about how cash flow is a financial early warning system. What are the top 2 to 3 numbers a founder should be focusing on and should be tracking before they even approach a lender or investor?
Yeah. So basically boils down to three numbers. It can be more complex than that, but really knowing them, because not knowing these numbers is going to cost you these opportunities. So number one is like your monthly burn rate. So knowing how much cash is leaving your business every month, regardless of what the revenue is. And then secondly, like a runway. So at your current burn rate, how many months do you have until you're out of cash? And then three, knowing like the collection cycle. So sometimes you'll hear, again, talking about foreign language terms, the cash conversion cycle. So what that means is that it's the gap between when you earn the money and when it actually hits your bank account. So do you know what the difference is between profit and cash flow? And that gap is often where, problems are hiding, because we can't pay back loans from profit. We can only pay them from cash.
Mm-hmm. While we're on the topic, there's one question I want to um, answer live from Tina. Um, they mentioned that they've been teaching themselves all the ins and out of the financial business world, and they need some training on financial tracking and how to learn how to track their cash flow. Do you have any recommendations on where they can get some of that learning?
Oh, it's such a great question. I love it. There are so many places. Like honestly, we have a richness of information. And information is sometimes not the same. Well, it's not the same thing as guidance. And the guidance to apply that information to your specific situation and actually gain insights. So I would say the number one thing is surround yourself with community and tap into those networks of other women entrepreneurs, other people that are having conversations about money, finances, cash flow in business, and just normalize the conversation. It's like learning a foreign language. So immersion is the key to success, and really like going to the French cafe and tasting the croissant, so to speak. So, and enjoying that process of learning the foreign language and not letting the overwhelm or the confusion like stop us from just continuing to have conversations. We're all on a growth edge. We're all learning, and there's so many resources available. Just tap into what's around you and just keep having the conversations. Call up
Hmm.
someone like Andrea just to have a conversation about what the options are. See applying for funding, applying for grants, like see those conversations as just learning opportunities, and that is your primary measurement of success is
Hmm. Yeah, I mean, there's no stupid questions, right? Ask the questions, connect with people. I mean, even events like this are great. You know, I see people sharing resources in the chat, which thrills me. Um, I think the, you know, especially in the Canadian women entrepreneur ecosystem, it's such a strong support system. So, you know, re reach out to one another and support one another. Um, Now for any of my panelists, what is the one thing you find or you've seen most founders get wrong when it comes to pitching Canadian investors?
I mean, I
So,
think, oh,
oh,
sorry, go ahead.
um, one of the programs that we ran was Investor Speak, and it was aimed at preparing women entrepreneurs to pitch. And so I love me some stats. So apparently 97% or a little bit more than that of equity financing goes to male-led ventures, male-led founders. And so why is that? Well, women get different questions and responses to from investors. And so they're asked and expected different responses than men do. And so I think that's just one piece of it, one tiny little piece of it. But if that's kind of kept in mind and you take a look into that research as part of the preparation, that would be a big one as a woman.
Thank you.
Yeah, I was just gonna say that the preparedness of, you know, just knowing your numbers and making sure that when you are pitching, you are really, really clear on exactly what it is that you're able to bring forth. I think another challenge is we often will value our businesses at a higher dollar amount than maybe what we can prove in terms of numerics. And earlier stage is difficult, right? Because you don't actually have traction necessarily yet. So it's really kind of your best guess. And so really bringing forth the numbers around who is that total addressable market? What is your approach to go to that market? Ensuring that you are also showing to your potential investors that you're looking at all different resources of funding and not just fully reliant necessarily on them. And what are you doing that's a little bit scrappy and different from other entrepreneurs? How resourceful are you being? What are some of the things that you are thinking of in advance of when they're asking you? I think those are all things that will help with pitch.
Hmm. I really love this comment from Julie in the chat. So I'm wondering if any of our panelists have some advice to build off of it. She wrote to remember that you are interviewing your investors too. If they don't
Mhm.
feel like a fit for your company, then don't take the money. What what advice might you have? I feel like, you know, talking to an investor is similar to going for a job interview, right? You really want it, but if you feel like you're getting some of those red flags or a gut feeling, what are some things that entrepreneurs should look for on their end of if it's a good fit for them when speaking to an investor?
That's exactly it. I think that is such an important comment. The number of clients that I coach through those kinds of conversations and really coach them into that mindset of this is a collaborative partnership. You are the client. You're actually like hiring the person that you're borrowing money from. They are working for you in a sense. And to kind of go in that with a mindset that you're providing value. Um, funders need strong businesses to put money into. And so that's not arrogance. That's just like running your business and knowing what it is that the funder, what their requirements are.
Mhm.
I think strategically choosing who the investor is and what their background is, whether or not they can help your business grow. Sometimes, you know, you're pitching the wrong person because their background, they don't really know much about the industry that you're in, the needs of your audience. And so being selective about who it is that you are pitching is likely very important, because you're going to be giving a portion of your business away to them. And so are they going to be able to fuel you in a different way, either through advisory or connections, or, ideas in terms of how you can go to market, or, all of these different things. Investors should be really connected to that purpose of your business.
Hmm. I mean, I see a lot of chat about Dragon's Den and Shark Tank in the chat, and you see that a lot on the show, right? Of investors will show up and they say, I'm only pitching to this person because I know that they have this specific background. Now it is a TV show, it creates entertainment when you re reject Kevin O'Leary over, someone else. But that is something important to remember. Do your research on your investors, and time is money when it comes to spending your time in those meetings, those conversations with investors. Now, Kara, you've talked about how bookkeeping can give someone the confidence when it comes to speaking to lenders or investors with the facts. What is the most common bookkeeping mistake you see founders make that hurts their funding chances?
Yeah, I think it's treating bookkeeping as a tax or a compliance exercise rather than a decision-making tool. So your books are showing you where you've been in the past. We do need to have that. We do need books in order to file our tax returns and remain compliant. We need our accountants to give us tax advice. Um, and what is also needed, or the biggest gap that I see, is then taking those books and having someone like myself or like a business advisor like Andrea or any of the other like resources, and Stephanie in your work as a with on the grant side is to actually look at those numbers and look at the forwards looking forecasting based on the historicals. That's the piece that's needed. You need someone to help you see where you're going. And you can't do that if the foundation itself, the foundation being the bookkeeping, accurate bookkeeping, you can't do that if the foundation is a mess.
And Stephanie, for grants and sometimes pitch competitions, they can often come with a requirement of reporting. How can strong bookkeeping assist in this process?
Right. So with grants, often there's a specific activity or cost that the grant will cover. So let's take a basic grant, like a hiring grant, for instance. So bookkeeping is important because you need to ensure that you are in compliance with the rules of the grant. You may not be able to bring this person on as a contractor. In fact, more than 90% of the grants that I've seen, they have to be on payroll. They have to be on T4. And so making sure that you understand if somebody logs, I'm making this number up, but 20 hours a week or 40 hours a week at $25 an hour, that's $1,000 a week. You're not just paying them straight up 1,000. There's a CPP, there's the EI, there's the vacation pay, whatever the mandate is for payroll in your jurisdiction. And so sometimes the grantors will look at how it is that you did these calculations. Are they compliant, in order to verify that you are actually, taking the right deductions? And therefore, when you go and make the claim, they, being government, they also need to make sure that that is being communicated. And so best practice in bookkeeping has to do definitely with basics on that. But also sometimes what will happen is the grant will pay for a portion of an activity, say, for example, trade show. And so the opportunity is to make sure that all of your receipts associated with maybe shipping products to that trade show, making sure that you've got the booth costs covered. Maybe you're paying for rentals. Maybe you hired someone to, like, locally there to help you essentially take care of the booth while you are not able to be there all the time. And so those types of expenses, depending on the type of grant, might be covered. And if it's a disarray and all you have are credit card receipts, they're going to ask for the details of what that looks like, who issued those invoices, when did you pay for them, what were the dates of those invoices, do they match the grant itself? And so it can get very complicated if everything is in a shoebox.
Mhm. Thank you. Um, Kara, how do you have any advice on keeping those receipts? Do you use a software to scan them in or anything like that?
Yes, these days there is so much technology that can support us. Bookkeeping does not need to be an onerous thing. We are on the cusp. I think it is I can't wait for the day that bookkeeping actually becomes easier and more AI assisted, because I think it is one of the biggest gaps. And so right now, the key is to really connect with a bookkeeper, connect with communities, that can teach you how to keep your own books if you're super small in the startup stage. But that just like Stephanie said, like having those clean books is critical.
Awesome. So I did sprinkle in talking about pitch competitions a little bit. So speaking of pitch competitions, there are many that happen across Canada. Some give out a cash prize with no strings attached. Some are more considered a grant and require some reporting. Stephanie, how does a business find out about different competitions and discover if it's a right time investment for them?
Hmm. I mean, they do pop up not necessarily on a proper cycle. Some do because they've had the history of maybe every spring, that's when they will pop up. So this is definitely one of the harder ones to track. We in our technology do have contests and prizes as a category if someone is looking for that. I will say that it's less of, you know, sometimes you'll see this information on social media as well, but it is a timing. That is the biggest issue with this one is timing because there isn't a normal cycle to it. I will also say that my recommendation is actually not to use a grant consultant or writer or someone to help you with those. Often now it's also created a video, and so there's not much that someone like myself can say that would be more passionate than what you would say about your own business. So making sure that you are reviewing what are the types of questions and assessing whether or not you are, again, a good fit for that contest is going to be key. And then creating something, it doesn't have to be a professionally created video, but does need to answer the key questions that they are asking. So if they're asking about A, don't go and talk about how amazing you are doing in B, and making sure that you're really targeting exactly what it is that they will need to adjudicate your submission. And then, of course, yeah, there are some that are more grants. I kind of hesitate there because those are being prizes. There might be a little bit of reporting, but I think it's limited in terms of what you need to provide, maybe some receipts. But if it is a contest and you're winning it as a prize, the benefit for you is you don't even necessarily need to tell them how you're paying for a certain thing, or what it is that you're paying for. I mean, in your application, you will speak to it, but just understand what the criteria is for if you were to spend it on something else in your business, is there going to be a challenge there? And so there are these programs, they're national. They could be also some that are regional and definitely some that are international as well. Not my cup of tea necessarily in terms of expertise, but I would say if you don't apply for the grant, it's like winning the lottery. If you don't buy a ticket, you can't win.
Yes.
Right.
Yeah.
And so if you're not going to be able to, if you don't apply, then the answer is going to be no.
Totally, totally. And I think someone kind of mentioned this in the chat. A huge benefit of pitch competitions is a lot of them are in person and they come with networking as well, right? So
Mm,
you're in person and you can have those conversations and you can meet people. Startup Canada, we host multiple pitch competitions every year through a variety of programs. I'll plug some upcoming ones in a second, but I see frequently that pitchers who pitch in the first round and maybe they don't advance to the finals. They actually made a really strong connection with a judge, and now they have a business connection and someone who wants to build their business in a new region or through a new industry or something like that. And so you never know what you can get more than just the total top prize from a pitch competition if you have the time. Now, time obviously is money, time is important. And every pitch competition, as you said, Stephanie, comes with different requirements. So, we have a couple pitch competitions through Startup Canada right now. We have one through Startup Global, which is for any businesses looking to export, and then Startup Equal Slice, which is for equity seeking and deserving entrepreneurs, and they have different requirements. So, unfortunately, we do receive applications every year for those pitch competitions where they didn't meet the eligibility requirements. So just take the time to read through before you take the full time to fill out the whole application to make sure it's actually a correct match for you. Um, Now, next week, we're actually going to be in Calgary with a Startup Global Pitch competition. So, if you are based in the west coast of Canada, you are welcome to apply and have the intention to export or are exporting already. You are welcome to apply to the Startup Global Pitch competition in Calgary. It's in person. Applications do close today at 3 p.m. Mountain Time. So, get your application in quickly. But that's coming up, and we're also going to be visiting Victoria and Mississauga in the fall. So if you are based in any of those cities, check out our pitch competitions. There might be an opportunity for you. Our Calgary one next week, the grand prize is $15,000. So a pretty nice chunk of change. We'll share the link for Calgary in the chat. Okay, we have a couple more questions, and then I want to make sure we have enough time for the Q&A. Kara, with nearly 30 years of business experience across multiple multi-seven-figure businesses, what is the biggest mindset shift you've seen women make around money and funding their business?
I think it's about, stop asking permission to want what you want. Just, we are facing so much. It's not just mindset within our own selves, it's also the cultural barriers that women face. So understanding the cultural context that we're in as well, and that we can sometimes shame ourselves for not shifting our mindsets, fast enough, or whatever kind of pressure we put on ourselves. So understanding that cultural context, and also just really believing in the value that we're providing, and approaching it as learning. Every time you hear no, it's learning, and being willing to be vulnerable and visible and understand how, as women, that can feel really unsafe to be visible and vulnerable and be seen as brilliant and imperfect. But to really invest every day in your personal growth, in your mindset, surrounding yourself with community of people that are building you up, not trying to tear you down.
Thank you. That's incredible advice. Stephanie, for yourself, Granted works with businesses across over 20 industries. Are there sectors or business types that are consistently underserved um, or and yeah, what advice would you give them?
Hmm. Well, women businesses tend to gravitate towards service-based companies. So if you're in, retail or in restaurants or in food service or consulting and coaching, if I were to choose a business type that tends not to get as much grant funding, I would say that's what it is. It's really across the service-based side. It's not all. And the reason is because Canada tends to focus more on innovation types of programs, or ones that are a little bit more, in kind of my perspective, is a little bit more tangible, that they would be able to provide additional funding for. So often if you need equipment, or if you need to buy a piece of land or whatnot, there may be different types of programs based on that. But I will say there are some trends. And so nobody is ever left out when it comes to grants. Let's just take Granted as an example, because I can speak about my own business. Over the last 10 years, we've probably accessed about $250,000 in grant funding. And so we're a service-based business that is, yes, we've moved a little bit into tech. And I would say probably half of the grants had to do with the fact that we were doing that. But even in the service-based side, we were able to hire people, pay for some training, and access different types of programs that way. So the key, I think, though, is understanding that it's about what the initiatives of the government are for the year. And the flavor this year, you hear it everywhere, is defense. So if for whatever reason your business happens to be in that realm, whether you're supporting armed forces. If you have products or services in those areas, that is an area of support. Green, clean sustainability has always been and continues to be a priority here in Canada. You've been hearing a lot of natural resources stuff, so it's associated with mining, forestry. Again, you could be consultants in those areas as well. And so those are kind of the three that I would say that are core in terms of industry. And then the offset of that is definitely anyone who's been severely impacted by the tariffs. And again, unfortunately, they're looking at primarily supporting businesses where the hit has been harder. And maybe it's a matter of layoffs and a matter of all of these different challenges that these businesses are coming across. Every province has its own sector of focus when it comes to the tariff relief programs. And it is a part, you could apply for the grant portion, you could also apply for the loan portion. And so just make sure, it is a huge application. So make sure that you are fully looking at what you need, including a business plan, for instance, and that things are updated before you go ahead and submit something for that.
Awesome. Thank you. And Andrea, WeBC's lending has generated over 120 million in economic activity in BC. In your experience, what separates entrepreneurs who truly scale after they get a loan?
Right. So one of the resources that's coming down the line, and I'm plugging, is our brand new Access to Capital on Demand course. And so when we were building that course, it's a bit of behind the scenes, all the business advisors got together and we were asked, like what does make an entrepreneur have a better chance of success, or that whole conversation around viability. And so we're like, oh, is it the money that they bring to the table? Is it their credit score? Is it their experience? And we had this conversation about, what makes a business have a higher likelihood of scaling and growing. And what we kind of kept coming back to was the entrepreneur's grittiness or adaptability. And when someone applies for a loan, you start to have this conversation with them, inevitably you're going to come across like some gaps. And when you ask them about them, they could be like, nope, this is the way it's going to be. Or like, oh, okay, and like take it in stride and, be open to it. And I think it's that approach to the business that is so valuable, because inevitably, any business you have, there are speed bumps coming your way. And if you are flexible and able to handle them and be creative in those solutions, that's what is going to be a great predictor of success. And so it is that kind of characteristic that is common on the businesses that we see succeed.
Amazing. Thank you so much. Thank you so much, our panelists. We have about 15 minutes for our Q&A now, so I'm going to get into some of the questions that were in the Q&A or added in the chat. For these, I'll direct them to any of our panelists. Stephanie, heads up, there's a lot of grant ones.
I see that. I'm scrolling through and I'm like, oh my God, we need our own separate webinar on this. All
We
right.
might need to do a grant specific one.
That's fine. That's fine.
But any of our panelists, feel free to jump in. This one is first actually from an anonymous attendee. What would be the reasons to go into a round of asking for investment from your friends and family before going through a personal line of credit or a bank loan?
Yeah, I think that's a great question. And I think it kind of comes back to what has been touched on during our webinar today, which is really understanding deeply, like, what is it that you need? Do you need, what is it do you need? When do you need it? What is your mechanism? Are you planning to repay it? When do you think your cash can support to repay it? Like, really deeply understanding what your need is, and then looking at all of the different resources that are available to you, whether that's friends, family, funders, like all of those different possibilities, and having those conversations to figure out where there's alignment between what you need and what's out there available.
Mm-hmm. a question from Tess. Their question's a little specific, but I'm going to broaden it to help as many entrepreneurs as on our call today as possible. So Tess specifically was asking if an AI business is considered a tech business because there is a lot of funding right now available for tech-based businesses. But I want to broaden that. We can talk about AI and tech, but I do want to broaden the question generally about, we do see some grants or loans that are industry specific, especially for those who might be in between industries or in a more new industry like AI. How do you define your industry and know that you're applying what fits correctly for you?
Hmm. I'm assuming you want like we'll speak on specifically on grants for this one.
Sure. Yeah.
Okay. So we straddle consulting and tech ourselves. And so when I go and set up my profile, whether it is through, the Business Benefits Finder or whether it is through our system, I am looking at grants on both sides. And I just need to be able to know that this grant will pay for this type of a talent and it might be tech focused. And so it's not necessarily meant for my consulting side. Then I would need to assess whether or not I have enough work for that person just to be working on the tech side of our business, that tech division of our business. So I think that it would be very difficult to kind of tie in, well, I want to hire this person to do, so 40% of their time is here, 60% is here, only 40% is tech based. 60% is consulting based, and write a strong application for a tech hiring grant, to generate this like story around, well, it is tech, but it's really less than 50% of their work. There's not much, knowledge. There might, in certain cases, there's not even a tech expert in an organization who can coach this person. And so that's kind of where I think it becomes difficult to kind of blend. What we are doing at Grant is we will probably in the next year be separating these two businesses into different incorporations, because then it makes it a lot clearer for when we are applying for tech, it's really clearly it's for AI, et cetera. I'd love to address the question though, to speak on that question from Tess about that AI. So just a little bit history of like when WWW came out. So I'm dating myself here. I remember when it came out and there was dial up and all that. It probably took, I'm going to say, a solid 8 to 10 years for that technology to become so prevalent that most, if not all businesses had a website address. Okay. And still to date, there are still many businesses that don't, but that's kind of that's what I would say. It's about 10 years. AI in the last year and a half, I mean, maybe a year and a half ago, you might have been able to get some funding from the government, or 2 years ago, to say, oh, I'm building something that's AI. But now they're just like, everybody's building something that's AI. They're using vibe coding, they're using different things. So the uniqueness of this has disappeared over 18 months. And I think that the government is aware of this. And so it is going to be more challenging to go through some of these innovative streams and present yourself as I'm doing something that cool, when what you're essentially doing is using Claude Code or some other, system to help you build something. You're not even really looking at the code and fixing it because you don't have the knowledge or capacity or time to be able to do that. And so then they're really looking at the people who are like, who are the developers who are digging one level deeper, where they're actually modifying the information and building it from maybe scratch or adjusting a lot of that. And so I think this idea of, I mean, I can't tell you how many competitors have popped up. It said like, oh, we've got a grant portal. And this is the one thing that I'm noticing is it's very easy for people to get into various industries now. The question is whether or not they have the expertise. And so it's that level that I think with AI, you can scrape on the surface. Are you able to kind of get into the depths of it? And so just know that, because it's been an excellent, we've had a great experience with utilizing AI, but we had 15 years of data. And so you can't build that out of, web scraping stuff online. And the optics from the government part is definitely a little bit more challenging now.
Right. Thank you. I think that's fantastic advice. I mean, it feels like I mean, I don't know about you. I can't go a business day without hearing about a new AI business, right? It is hot right now.
It is a hot, yeah.
Yeah. Um, uh, I love this question from Divya. They're asking what resources are available to review and validate my business plan and business model. Are there any free or government supported programs that would provide business plan feedback?
Hmm. For WeBC, when it comes to the business advising, we can do it on a quicker kind of a basis. But we have a business plan review service, and it is a paid service. It's 220, I believe. Don't quote me on that. Which is reasonable, because she digs right in and has, one-on-one, a number of one-on-one conversations and revisions and whatnot. So that's a more in-depth service. Having said that, there are a lot of business plan resources out there. The UBC Small Business Accelerator is a really great one. So it's all out there. But if you want that one-on-one, there's us, there's consultants that do that kind of thing specifically. Yeah.
Thank you.
Yeah, I feel like there's so many resources available for business plans. I mean, even just tying back into that conversation about AI, having, that support from AI. As an entrepreneur, I feel like the best proof of a business plan is just to put it in action and just start serving customers with what it is your value proposition is and get that direct feedback from the market and then revise. A business plan is not a static one-off, one and done document. It's a living, breathing, um, uh, it's just a representation of like what you're actually doing in your business to provide value and how you're doing that.
Fantastic. Um, there's a question here from Kate. I think it was one of our very first questions, about asking if any of our panelists, if you're aware of funding for Canadian corporations that are specifically run by non-citizens. Kate said that their business is established and has traction, um, and they have a permanent residency, I think. But they find it hard to find grants that they're eligible for.
Oh, that should not be the case. I will say SHRED, which is a tax credit, you do need to be a Canadian controlled private corporation to apply for. Actually, I don't even know that that's actually the case. I'm not a SHRED consultant. That's a separate kind of world. But I will say that it's more so that, it's the way they calculate your tax credit, which is a little bit different. But I don't know if you are a registered business in Canada and you have your proper registration, whether it's a business license and or provincially or federally registered. I don't know of any grants that look at the breakdown of your ownership unless it's specified right on the grant itself. And there's so few that would have that. It usually is like multi-million dollars where they would look at maybe they would look at kind of the makeup of that business and a percentage, but I don't know that that is the case. It's more challenging if you are a foreign business, registered foreign and not registered here in Canada. Canadian government isn't going to give you a dime because you're not Canadian here, and you're not supporting Canadian initiatives in terms of employment and whatnot. So I would look at that again and just take a look at maybe if there's a particular grant that you're looking at, maybe that's a specific guideline. But hiring, training, market expansion, R&D grants, a lot of them are very open to the fact that you can apply for funding so long as your business is registered here in Canada.
Mhm. I will also just plug the organization Immigrant Entrepreneur Canada. They're an organization specifically to support immigrant entrepreneurs in Canada, hence their name. And they're not a granting body themselves, but they are that support system, right? And so if you feel like you're having a bit of a harder time with your business due to your immigrant status, I think they would be a fantastic organization to get involved with. We work with them quite frequently. They're one of our community partners, so definitely check them out. Okay, we have a question from Scarlett, asking for advice on launching their business when you have no revenue yet. They have a solid business plan, have built their platform, and they're starting to receive mentorship. But without revenue, what else do they need to improve their chances at securing a loan or doing some crowdfunding?
I think this is, I mean, it's a very common, it's a common situation where there's a lot of things going, and that doesn't actually exclude you from a loan not having revenue. A number of the businesses that we give loans to that are startups don't have revenue yet. They haven't opened their doors yet. Um, and so there is that kind of subjective conversation that has to happen. Like, how far are you and how close are you? And, even sometimes even it's in lieu of that, having those actual dollars coming in initially, what we do look at is we do look at that primary market research. Like, is there some sort of indication? I'll give you an example of it, like a very concrete example is we get a lot of people that apply for loans to open a daycare. The daycare is not open. They haven't opened their doors. So how can we validate whether this is going to be a successful business or not? Well, we're looking at, the experience of the entrepreneur. Um, have they worked in the industry? Do they have connections with other daycares that might refer people in? Do they have an informal kind of wait list going on? So there's kind of these little things, these little nuggets that can that can build into something. And so, yeah, it is a very subjective process, but don't have that conversation. Don't kind of exclude yourself before you even start.
I'll just
Mhm.
add in like futurepreneur. I think if this person is a recent grad, I'm just going to make an assumption on age. But futurepreneur has programs where you can apply for a small loan, and it's for those who are entrepreneurs under the age of 40. And so that's all used to be called, I can't remember what it was called, like young entrepreneurs or something like that. And so young is under the age of 40. Great. And so that's a good starting point for something that might be small. And it sounds like it's a service-based business. And so that you might not need as much in terms of startup costs to be able to get that going.
Great. Okay, I think we have time for maybe two more questions. Um, One from Robin. It is grant specific. Um, Is it true that there's a maximum amount that you can receive in grants? Robin says that they have heard from another program that operates with the government that the total max they can receive is $50,000 collectively. Um, is that true? And
No.
how does your company work with that?
Nope, not true. We wouldn't be in business if that was the maximum amount. I mean, the biggest grant that we've secured for our client was $8.9 million. So that would be a problem if for them for sure. Um, I will say that there are some limits in terms of how much you can stack a grant. And so this is a little bit of a, freebie on this, like terminology on stacking. You might be able to apply for a grant for 50% of the cost. And then there's another grant that is through a different ministry or maybe provincially, and you might be able to apply for another 50%. So out of pocket, you are $0 if you carry through with this grant and both approve you and both are aware that you are using stacking. So what you can't do is say, I'm going to apply to hire someone. I mean, always use hiring grants because that's the more frequent one that people will use to starting a business. I'm going to hire somebody, and then I got a grant that paid, let's say, 80% of their wages. And then I went and applied for another grant, and I didn't tell the first grant about this one, and it covers 50%. So now you're making money on the government. That would be not legal or ethical in that perspective, right? So there's that limit, but I mean, granted, got to 250 over the last 10 years, and so there's no limit in that way. There are limits in terms of what you can apply for within a certain grant. So there are grants that will max out the maximum you can apply for. It might be $50,000 for that program, but then you just go to another program and maybe it's a different business initiative and you go and apply for that one. So, and some programs you can only apply once a year, right? You only have
Mhm.
one shot to get that approval, or you only get one approval in the year. And so just be aware of that.
Mhm. I'll follow up with a second myth that was put in, and I'd love to know if you have some um, knowledge on this. Is it true that you can't get government funding if you have personal CRA debt?
Oh. I think it depends on the program. I think that there are definitely some programs where it will ask you the question, is your business in good standing with CRA as opposed to personal, but it depends on how your business is structured. So if you're a sole proprietor, you are the business. And so then, if you're not in good standing personally, then yeah, that's probably going to be a challenge for you. But, I'm not an accountant or a lawyer, but if I think the company is a separated entity as a corporation, and it might even have different shareholders. So I don't think they can hold a shareholder's personal debt against that. Again, it does depend on what the grant is. The smaller ones probably don't have the even ability to audit that. But get in good standing, and then we won't have that problem. is probably the best advice that I give you. I'm sure you're working at it, but anything that you can do to remove these types of barriers is always going to be beneficial. That's what I would say.
Thank you. Thank you for bringing us through some of those myths. This is Mythbusters Grants Edition.
Oh my goodness.
The last question before I do close this out, I just thought this was an interesting one from Clyffe. They wrote about as businesses shift from physical assets to intangible assets such as data, AI, software. What role does intellectual property, such as patents or trademarks, play in securing funding? Do you see a relationship between owning a patent or trademark and actually getting access to capital?
I have seen trademarks and IP on financial statements, and it's a consideration. And if everything else on the balance sheet is looking good, then then it kind of is a little bit of the icing on the cake. But if everything else is falling apart and there's like a really strong IP value on there, that's not going to change the decision. So it's just a piece of the conversation. Yeah.
I think that assessing risks and awareness of those risks is a key part of applying for funding. And further to what Andrea said, the question of testing an asset for its actual value, it really is it driving, is it the thing that's driving or contributing to revenue creation and to cash? So if that intellectual property is the very thing that's driving revenue, and then a risk assessment of like how long is it going to be doing that for? How much risk is there associated with it not being able to do that in the future? That's the way I would frame thinking about those kinds of things.
I'll just add a quick note. I do know of a couple of different businesses who have entered into the US. They essentially stepped on a landmine of trademark issues, and they were kicked out of the US in terms of they can't sell there legally if there's a letter from Pepsi or a big corporation that owns that particular trademark. And so I would just really caution. I think it's going to be hard to IP tech generally, because then you're sharing with everybody publicly what it is that you're doing. So, there are some limitations there. Patents are always going to be something that investors would potentially look at as what is the value that it adds to this business. You have the patent, it means that the opportunity to kind of grow might be different than a company that doesn't have something that's patentable. But trademarks, I think, just protect your business, even across Canada. There's another granted out there, if you can believe it. They probably should have done their homework. And so these are some of the things that I would recommend, is just making sure that depending on the risk profile that you have and the size of business that you're at, the IP piece is definitely something that the government has doubled down on and double clicked on to make sure that we're protecting Canadian businesses.
Fantastic. I think that is a great conversation to end on. Unfortunately, we do have to end. I think we could probably do like a week-long seminar on funding. But thank you all so much for joining us for today's event. We do have a quick feedback poll that we're going to launch now, and we would greatly appreciate it if you could complete this before you leave. This is how some of the information we use to build our future events. Thank you so much to our fantastic speakers, Kara, Stephanie, and Andrea, for donating your time and your expertise. And of course, I would like to thank our program partners, Scotiabank and UPS, our ecosystem partners, WEOC, and our community of our community partners. And we'll add that full list into the chat. We are hosting our next industry roundtable of the Startup Women 2026 program on July 22nd, and that will be women in creative industries. We'd love to see you there. We'll share the registration link in the chat for more information. So please fill out the poll. And otherwise, thank you, speakers, and thank you, everyone, for attending.
Go and get granted.
Yes.
Yeah.